What's good? Welcome back to another episode of Where the Money At, and we on episode 15, man. We rocking and rolling, and I appreciate y'all for rocking with me. Today, we're going to talk about the price action and all this craziness that's going on in the Bitcoin and cryptocurrency market. We're going to talk about how to avoid confusion as far as information with cryptocurrency or whatever asset you're into, or just general economics. You know, your asset may be horses for all I know. And then we're going to finally end it off with some theory about GameFi, gaming finance. If you've never heard of it, man, we're about to get into it, and it's a subject I'm really excited about. So let's get right into it, and we're going to start off with the cryptocurrency market price action. So if we look at Bitcoin, we're sitting around 25.8. You know what I'm saying? But if you check out the charts and you've been keeping up with the market for the last couple of days, a lot of things have been going down as far as the altcoin market. As we can see here, BNB down almost 17% over the last 7 days. Cardano down 21% over the last 7 days. Solana, a project I really like, down 25% over the last 7 days. And we all know why these coins have went down is because the SEC has deemed them as securities, and Robinhood had to remove them from their platform. So, you know, that's the threat of other platforms removing them, and that causes the price to go down. But fundamentally, these projects haven't changed. These are actually Polygon, Solana. These are actually Cardano. These are projects that have really, really good fundamentals. So nothing has changed besides the sentiment around what's going on in the cryptocurrency market. But we know, and what we always say around here is it's not necessarily all about the day-to-day price action. So let's get into, a little bit more price action. Let's talk about it. So here I have the weekly chart of the Bitcoin price. Like I said, we're sitting around 25.8. And you know what these lines are if you've been keeping up with the channel. It's just the areas I feel like will range in between, 48 and 15 before the next huge leg down or the next huge leg up. And we know what this squiggly line is here. Nothing. I just drew it because I believe it's something that could, possibly play out, but who knows? We could take off, we could crash down tomorrow, but who knows? So let's look at the current price action. If we look at the range that the price has been in, it's been in between, let's say, 3,100 and 26, and it's been bouncing in this range right here. So if you're a trader, I guess this is where you want to make your home. You know, my strategy, I'm not a trader. This is more long term, so this particularly doesn't matter to me. But it's looking like we could go back up to the top of the range, or we could be breaking down to fit inside of this larger range. So let's see. If we look at the fib retracement from the last previous all-time high to kind of the previous recent local lows around 15,000. The all-time high was about 68, 69,000, and the lows were 15,000. So if we look here, we can see that the 236 has kind of become, it may have flipped into resistance, because you see we tried to break above it on this long-term downtrend, and we're going to see if we're able to go above it or we're going to break down. But let's get into some talk about how to avoid confusion in the cryptocurrency market, or just general economics, or whatever assets you like to be in. So sometimes you may find yourself asking, who do I pay attention to? How do I know what metrics to pay attention to? And the answers to these questions comes with your time and experience studying whatever particular asset you like, because you have to lock in on one asset. I feel like you have to lock in on one asset and do what you have to do, because you can't be spread out too thin, or you're going to be a master of nothing. So when it comes to those, if you find yourself asking these questions, just spend more time in it. You need to dive deeper, listen to more people, more information via videos, podcasts, books, courses, because the more information you get on it, the better you'll have an ear and an eye for the things that you need to pay attention to and dismiss. I'm a software engineer, so if you come BSing me about software engineering, as soon as I hear it, I know you don't know what you're talking about. But that's because I've spent so long in it and I understand what to listen to. So as far as cryptocurrency, when I started, I overloaded myself on information, and now after you start overloading yourself on information, you start to have opinions, because when you first start learning about something, you have no opinions about it. You're just listening to it. and you have to take everything you hear as, you know, some type of truth and grain of salt. And the more time you spend around it, and the more mature you get in the asset, you'll be able to curate who to listen to, what information to take in, what information not to take in, so you don't have the information overload like you do at the beginning. And the same as far as who to listen to goes for as what metrics to pay attention to. Like in cryptocurrency, there's things like you can pay attention to the unemployment rate, the M2, M1 money supply, jobs numbers, debt ceiling, the VIX, the dollar index, the S&P, you know, the Dixie. You know, what do all these things mean? And I've been studying economics for a while. And if you ask me as far as each one of these individually, I can't break it down to you to a science what each one of these means and their magnitude. But all I do is, and what I believe everyone should do, is take all this information, listen to people discussing and learn about it as much as you can, and then take that information and put it in your thesis of what you believe the market is going to do. And then you take that and implement it to your strategy of how is this going to make me money? Because that's the only question that matters. That's what I ask myself every time I'm hearing information. Like somebody will talk about the Dixie or this type of pair going up and down, and I say, how does this make me money? I try to understand as best as possible, put it into my thesis of the grand scheme of everything of what the market can do, and then I put it into my strategy of how it can make me money. All right, so let's look at an example of that. And as far as an example of who to take information from, let's look at someone from the mainstream media like Yahoo Finance. Now, I'm gonna be honest with you, the mainstream media's role in my strategy doesn't play that big of a part, because I feel like they always, you know, have these type of videos, and there's some jargon and some lingo that the everyday common people like myself don't understand and can't do much with. But you still should listen to these things, because there are things that you can take away. And depending on how you work, it may you may hear something that sparks something to lead you to other information. So I'm gonna play about a minute and a half of this, and I'm gonna skip around because he's talking nonsense. But I heard a couple things that sparked me to look at other things. So check it out.
Investors out there wondering whether or not this momentum to the upside, if this rally has enough legs to continue. What do you think?
Yeah, thanks for having me, and TGIF, everybody. We think it does, right? I've been coming on for a while saying we think this is a new bull market. I know now up 20, everyone's saying it's a new bull market. We went overweight stocks in late December on the Carson Investment Research team, laying out some of these things. I'll just start with this. I love this little factoid. Today's a Friday, right? This is one of the strongest years ever for stocks on a Friday. Think about the last couple of Fridays. We've had buyers. I know we'll see where we close here, but it looked like another up Friday. Keep this simple. This would be the best year ever for stocks on a Friday. Some of the other years, guys, that had good Fridays, 99, 98, like might have been the 14th, close enough for government work. The stocks are up. Okay, now I know we had a bear market, and I know we bounced since then. We think we're very close. Our personal opinion is the Fed indeed is done hiking. The inflation data is coming back. The supply chain's opening up. We don't think they need to hike again, but they're close. But, you know, again, when you look at, let's say the Fed is done hiking, okay? Look at the last 10 times. 1 year later, stocks were higher, 8 of them. Only 1981, and then again in like 2001, I believe is when it was, when the Fed stopped hiking and stocks were down a year later. So it's rare. Where you gotta worry is when the Fed starts cutting. We don't think we're anywhere close to cuts. I think they're done. And again, the economy's strong. We did all that stuff. I mean, last week's jobs number.
Okay, so he said a lot there. A new bull run for stocks. The best Fridays. That I don't even know what that means, but he also talked about 8 out of 10 times that the Fed has cut rates a year later, stocks have been higher. So that really sparked my interest. So, and he didn't specify which cuts he was talking about, because if you can see this U.S. federal funds rate chart, he could be talking about this cut here. He could be talking about this cut, this cut, this cut, this cut, this cut, this cut, this cut. So, you know, but it did spark my interest and make me want to dive deeper. So, you know, we dove deeper. You know, we get that information over here. So here, and I like to take the last 25 years. This is the max chart. This is the max chart. But I like to look at the last 25 years because this is the most recent cuts that we've had. And when I say cuts, I'm talking about the first cut after that indefinite pause, after that real pause, as far as when we've got the rate as high as we're going to go, and the Fed has several meetings, said we're not going to raise, we're not going to raise, we're not going to raise, and then they say, okay, we're going to cut. I'm talking about from this point here to this point and this point. And I have when they cut marked by blue vertical lines. And if you want to look into the specifics of what actually happened, we're going to get into that too. But if you pay attention to the last 3 times that we've cut, we've rallied into the cut, dropped a little bit before it cut. Stock prices, and this is the S&P 500. So this is the total, the top 500 stocks. We've rallied into the cut, dipped a little bit after, rallied some more, and then there was a major drop, major percentage drop. Same thing happened. So this was in 2000. Same thing happened in 2007. Rallied into the cut. Right after the cut, we dropped a little bit, rallied some more to catch a new high. Then there was a major percentage drop. And then we have the COVID cut, which I'm putting a little more weight on these two versus this one, because this one just, all of these issues were, once in every several year things, but the COVID one was just so different and so unique. There's a major dip, but still, we rallied into it, dipped before, dipped during, like right after the cut, and then we rallied higher, and then there was a major percentage drawdown. So if we're looking at it as a whole, if we take the COVID Fed cut, we cut around August 1st, 2019, and I have it at August 5th. And then about 6 months later from that cut, we dropped 35% over the period of a month. That's this drop right here from the S&P from 33 to 22. So we got that. So that was 6 months from the cut. During the 2007 cut, we cut around August again, 2007, which I have it around early August 2007, and it didn't drop until 12 months. So the COVID cut was 6 months, then the big drop. 2007 was 12 months, then a big drop. Let's look a little deeper into it so we can paint a better picture. We cut around August 2007, which the market was at around 15. And then around August, where's August of the year later? August a year later, we're here, and that's when the big drop started. And that drop was 58% over 500 days. So that took a year and some, So if we back up and look at the last one, I'm not trying to drag this out, but we cut around January 2000, and 6 months later, we had a huge drop of 51% over 770 days. So just based off so I took that information off of what he said, and what he said was, I just have to disagree with it. You know what I'm saying? Because I don't know what cuts he's talking about, but we can see here 35% drop, 58, 51, and 6 months, 12 months, 6 months. So we're averaging somewhere from 6 to 12 months from the cut, this is how I get my hypothesis of I believe there's going to be a cut, a dip after we cut, because all I have to go off of is history. Fed cut after that long pause, and we dipped down. And he said right before I cut the video off that he doesn't believe we're anywhere near cuts, which means what could possibly be next as far as the Fed fund rates go is that pause. This is where I'm getting my information from, and I'm just telling you how I see it. But so we talked about that. So take it how you will. That's what I believe. None of this is financial advice. This is just kind of what I see going and how I plan to use this information for my strategy to capitalize as far as cryptocurrency goes. But let's talk about something else. And this is a subject I really, really, really enjoy talking about, because this is more theory related, but it's on the way. It's theory related, but it's just what I believe will happen in the future. GameFi, gaming finance. There's a whole section of gaming tokens. You know what I'm saying? But GameFi is gaming finance. So what is cryptocurrency? Cryptocurrency is you can get on your phone and you can put your money into, ICP and have coins and then trade that back out to get your money back. So gaming finance is mixing in-game currencies with what I believe cryptocurrency could be. So linking an in-game currency to a cryptocurrency. Therefore, like you at this point in time, you can take your money and let's take NBA 2K, Fortnite, Madden, Oblivion, PUBG. Let's take those for example. You can take your real money and buy those in-game currencies. But I think when businesses and these companies start allowing you to take their in-game currency and exchange it back for money, I believe the possibilities and the realms will just open up because now you just made that world real. And I believe once these game creators and companies start to realize the type of engagement that you can get once you do that, and then this game now becomes this person's or mine or your side hustle for some extra income or possibly your entire job, it's going to be ridiculous. It's going to be ridiculous. And that's why I'm excited about the metaverse and Web3 gaming and things of that nature. So let's take a look at how that could work. Let's say you play NBA 2K and you have your My Player. And let's say you just made this person. What if you're a person who doesn't like starting off on level 1 on video games? Let's say you don't want your shooting to be low, or you're playing Fortnite or a shooter game, and you don't want your aim attribute to be super low because you're getting tore by everybody who's already been playing. What if you were that person, picture this, who starts the game off on tutorial mode, plays all the way and levels your player, your shooter, your warrior up to level 10. And then you sell that whole profile for the in-game currency, and then you trade it out for real money on the market. Or you play Fortnite, you know what I'm saying, and they got all these skins and stuff, and you're an expert at getting a particular type of skin. You know what I'm saying? And then you play and get that skin, and then you sell it off and make real money from it. Or you can just arbitrage the marketplace. You can buy a skin for $10, for example, then sell it for $15. You know what I'm saying? Like you can really arbitrage and you can build business models around these games. And now things become real and now things become super exciting because now with that information, I know your mind is going on the games that you play and how much time you spent on it and what you got really good at and what you did in the game for money. And now if it's linked to a cryptocurrency, you know what I'm saying? And you can exchange it for your currency, your nation's fiat, your mind's going. Like I know there's a million people who spend 1 million hours on 2K for VC coins, on all the coins they earn, instead of spending them on their player, they, you know, exchange it back for a little bit of their real money, you know, and buy shoes and then resell the shoes. And man, the possibilities are endless. I like playing a game called Oblivion. You know what I'm saying? Where you could do all type of crazy stuff. And oh, come on, don't buffer on me. You know what I'm saying? You could fight, you know, that sword he's using, that shield he's using, that armor. You could create that and you can build it and sell it. That's what I used to do in the game for in-game money. But if it had an avenue where I could sell it for exchange the in-game currency for a cryptocurrency for real money, I'd be rich right now. And I know your mind is going. Like when there's a game called Star Atlas. It's going to be an open world space game. And there's already blockchain games trying to implement this right now. And this game is in development. And I'm not gonna lie, when this game comes out and there's other things to do, I'm gonna be a pirate. I'm gonna be an in-game pirate. I ain't building nothing. I'm getting my click. You could join if you want to. We're gonna stream it. So, you know, it's coming soon. But I'm just gonna get other people resources and sell it. Like that's how we rocking. You know what I'm saying? But you know, that's the type of fun things that you can think of when GameFi really gets rolling. And I feel like that's coming in the future. And you can bet it's gonna be some content on that on this channel. But I appreciate y'all for rocking with me. We're going to keep trying to figure out where the actual money is in cryptocurrency and the assets that you want to talk about. And we can get into real estate and stocks. And we're going to keep rocking and rolling. And I appreciate y'all for rocking with me, man. Holla.